Last week is also an interesting week in the forex market without a major catalyst in the US. The only things that make the DSY decline at this particular level, reject this particular level, is the Fed testify earlier on Tuesday and then on Thursday, which brings about the hawkish statement that there is still going to be 2 rate hike this year, without mentioning when they will hike their interest rate. So this is the weekly forex forecast, and let's check the economic activities of last week, how it affected the market, and the economic activities of this week, how it will affect the financial market. So last week in the financial market, we don't have much fundamental, especially in the US, and then Monday and Tuesday we don't have more volatility coming into the market Monday and Tuesday, but volatility come back to the market on Wednesday when the pounds release their CPI results, which comes out better than expected, and we have Canadian dollar retail sales there, which comes out better than expected also. Then on Wednesday we have the Fed chairman Powell testify, in which he said there's still going to be 2 rate hike this year, without mentioning the actual dates when they will consider hiking their interest rate again. And then we see CHF rally after we have the better than expected the forecast as expected result in the interest rate hike. The previous is 1.50 and the proposed 25 basis point rate hike, and then the result the result comes out as expected, that is 1.75, that's 25 basis point rate hike. And then we saw the pounds rally after they increased their interest rate by 50 basis points, and then the previous forecast was to go for 25 basis points, and then market took the better than expected result into consideration, and we have rally on the pounds on Thursday, that is earlier on Thursday, before we see some decline later that particular day. So we have the US unemployment claims coming out as previous results, even though the forecast predict slow down a bit, but we have it coming out as previous results. So we have the euro rally earlier last week, that is from Monday, Tuesday, Wednesday. On Thursday it was cut short after we have the lower than expected PMI results across the euro, that is from the French, from the Germany, from the French and Germany. So we have the pounds to decline after we have the lower than expected flash manufacturing PMI on Friday. So we have the euro GBP USD decline, we have the GBP CHF decline, and then some GBP too, not all. So then we have let's check the economic activities we have this week. Another thing I want to see is that the geopolitical tension between Putin and Wagner might actually influence the market this week. So we might actually see the safe havens currency gaining strength this week. Don't be caught unaware. But if they later settle the rift, then we should have market coming back to normal, and the normal peers and normal economic activities will be the major events that will push the PS. But if not, be expecting the safe havens currency to be stronger this week. So let's check the economic activities of this week and how it will have actually affected the market. So this week on Monday, we don't have much on Monday. We just have German info business climate, the SMB German general speaker, and the ECB president speech right there. So on Tuesday, I think we should have more volatilities in the market, which from the Canadian dollar we have the CPI month over month, CPI year over year, and then the trimmed CPI year over year. That is the inflation measured news right there. So the predicted slowdown in all of these. So this is the previous one, 0.0, the predicted 0.5 to 4.2%. So let's see how it goes right there. So, and then on Wednesday too, we have the AUD CPI year over year, and don't forget the AUD decline last week after 2 previous week of strength in the commodity currency. That is we have the SND, the AUD, which has been gaining strength since maybe 2 weeks ago. Last week we have the decline on the commodity currency, that is AUD and SND. So we have the Bank of England speech on Wednesday too, Bank of Japan speech on Wednesday too, and then the Fed chairman too speech. So we don't have much on fundamentals this week. I think if the geopolitical tension did influence the market this week, we should see more of technical playing out than fundamental. So on Thursday we have the final GDP out of the US and the unemployment claim out of the US, and on Friday we have the GDP coming out from card. So we should take a look at Canadian dollar this week, as we might see the best opportunity there in the Canadian dollar, because if you put the piece of puzzle together, you see that Canadian dollar is the one that actually have the major economic sentiment this week. And then we have just a little of the United States on Thursday, that is from the final GDP and the unemployment claim right there. So this is the fundamental analysis. So let's go to the technical analysis. In the DXY, we have seen that we have this, we have fake breakout here, fake breakout, then break back to the trend line, then we have a rejection at this area as well, and this area too is a very solid area. So we should look for the DXY back to 104,299 as the first resistance level at this particular area. But according to the hawkish statement by the Fed, that there will likely be a 2 more rate hike this year, but he didn't specify the date and time. So actually we should see the DXY back to this level right here. This is my personal opinion right there, for the DXY to be back to 107,995. But if you look at it, the nearest resistance right here is 104,291. But if eventually the recession fear out of the US coming to play out, and then we have recession in the United States at the end of this year, because the recession fear is high, and then there is a possibility of United States going into recession by the end of the year. If we have that play out, we should see the DXY below this particular area, and then probably it then break this particular resistance level, because we have it tested like so many times. So actually we might see a break of that resistance if the recession fear coming to play out. But for now, my overall bias is the DXY to the upside, that is the stronger US dollar. Still want US dollar to rally to 104,299 as the first target. Then if you see 105 move, then to 107 right there. So let's take the individual pairs and then see how it will go. So the first pair we want to take is the pounds US dollar. So irrespective of what happened in the US dollar, I'm favoring pounds to the upside. And if let's check the 4-hour time frame, where we'll be taking our entry right there. So I'll not be looking to take my entry at this particular area. No, I'll be looking for the breakout of this, the break to the downside of this particular minor support level, and then come to take my buy position at this particular area. So if this particular area fails, I'll be looking to take my buy position at this particular area. So my overall sentiment is the pounds to the upside in which I'll be taking my potential buy position from this area, from 1.26376 to the upside, and this is my profit target right here. That is 1.29619, and if this particular area fails, then I'll be looking to take my buy position at this particular area. If it fails, then I will not be taking any buy position on the pounds US dollar. Then I'll be willing to go short at that particular area. So this is my two level right there, 1.26373 if I say rejection, or 1.25370, and the take profit level is 1.29619. So let's go to Euro USD. Euro USD right there, as you can see, we have break back to this low right there, and then we have went to retest this particular place as the resistance level. So we break this low right here, then we have a rejection here. So actually you might see a little bit of maybe a range move from this level before we see a break back to the downside to 1.07811. so that's what I'm looking at right here. So this is a retest. Actually, any retracement you see to this particular area should give you an opportunity to sell back at this particular. So we might have some range at this area before we have the further decline to 1.07811, but I'll not be looking to take a short trade if we have a break above this level, this particular level right here. If you have a break below this 109,646, I will not be willing to take any short position on then Euro USD. I might not be looking to take any long position either, because if you take any long position here, we have a very solid resistance at this particular area. Before you know, you might hit here and then you see a max rejection to the upside, a very solid rejection to the upside at that particular level. So all my bias is to the downside if it breaks this particular level right. If it break 1.09646, I will not be looking to take any short position, because this might actually come here and then you see the formation of probably head and shoulder before we have a decline at that particular area. So let's do it like this. We might have something like this, then a decline to the downside, which might actually make it forms head and shoulder right there. But if I now see a break of this level, I will not be willing to take any short position on Euro US dollar this week. So that's that on Euro US dollar. Let's check the next possible pair, which is XAU US dollar. That is the gold. So gold, we have a rejection at this level, but it has tested a particular level many times. This support level has tested it a lot of times. That is 1, 2 with a lot of rejection candles right there. So what I'm looking at here, pardon for this. So what I'm looking at right here is for you to, let's say we have a break of this particular level right there, then a retest, then a move to 2028. So that's what I'm looking at. So if you have to use let's use the line chart to dictate what we are going to do at that particular area. So let's say we have a line here and then a line here too. So let's say we have a line here and a line here too. So using this line chart, if we have we are going to use if here, because there are some levels that will break, that will make you to know that okay, this is sell, and some levels will break and you know that okay, this is actually a buy bias. So if we have this level break and it break this particular support level right there, because we have a support level line down at this particular area, then if it break it to the downside, then we should be looking to go for a sell bias at that particular area. But if we see maybe a little bit retracement, let's say a little bit retracement, then a breakout to this particular area, that we should be looking to take a buy bias at that particular level. That's simple as that to 2028. So we go back to the candlestick see what I'm talking about at that particular area right there. So if you have a break of this level, then you should be looking to take a buy bias at that particular area. But peradventure, if we have a move back to this level and it break the support level at 1938, then we should be looking to take a sell bias. But all one looking at to take here is a buy bias. If we have a break of this level, I might not be looking to take a sell bias right there. Before I take a sell bias, I might maybe have a second thought about it, because the whole scenario here is to the upside, and then we have a strong level at this but if we have a break of this place, it might sells with a high momentum or high volume right there. And then another thing I want to say is the geopolitical tension in Russia between Putin and Wagner might make gold rally as the safe haven this week. We might have good rallies, CHF rally, and then the JPY rally at that particular area right there. So let's see how it goes. The geopolitical tension might actually be the sentiments of this week, and then if it calms down, then we'll have the normal economic activities as the catalyst to drive the market this particular week. But like I said, we just technical might actually be the driver of the financial market this week more than the fundamental, because we don't have much on fundamental this week apart from the Canadian dollar and then let's say US dollar. But if the sentiment of the geopolitical zone is high, then we should have the safe havens currency strong this particular week, with gold as well as safe haven currency. So we should have the gold rally back to 2028. So the next pair I want to check is US dollar Japanese yen. So this pair we are still in an upside. So any retracement you see here, let's say you see a retracement, is an opportunity for you to look for a bullish bias to 149.764, because the whole bias is still to the upside, even though we might still have a retracement. But any retracement you see, should be looking for a rejection, and then maybe probably a rejection candle for you to actually, a reversal candle for you to actually continue the buy movement to 1.49764, unless there is an intervention from the BOJ, or even if the geopolitical tension coming into play out, we might not see much effect on the US dollar JPY, because both US dollar and Japanese yen, they are both safe haven currency as well, so we might not have the major impact on this particular pair right there. So the next one we want to check is US dollar Canadian dollar. So I'm favoring a move to the upside, especially when the Canadian dollar have the CPI report on Tuesday. So after the CPI reports, I'll be looking, if it comes out let's say disappointing, I'll be looking to take a buy position on US dollar CAD back to the upside. So I'll not be willing to take any position if we have a move to the downside. Let's say a Monday candle closes below this level right there, I will not be willing to take any position on this particular pair. So I'll be watching, and then be predicting my next move by watching. But for now, this is the safe zone right there. So let's see if it closes. But if the Monday candle closes bullish on Monday, then I'll be looking to take a buy position on US dollar CAD. If it closes bearish, I'll avoid this particular pair right here. So on Euro CAD here, on Euro Canadian dollar, last week we hit our target on Euro CAD last week, as we set our target from here, and then we have our take profit around this particular area. That gives us like 80 to 90 pips last week. That is, I think Euro CAD is our best trade for the week last week, and then this week too. Let's see how it goes there. But I'm favoring more move to the downside on this particular pair, especially if we have the Canadian dollar CPI news maybe coming out better than expected. That is when I'll be looking to trade Euro CAD. So if we have it weaker than expected, I'll be willing to trade the US dollar CAD. So let's see how it goes right there. So any retracement you see, let's say retracement to this side, should be an opportunity for you to look for a bearish setup to 1.42434 right there. So that's what I'm looking at on the euro Canadian dollar. The whole bias is to the downside, but if you have a break of this particular level right here, because we can still, euro card move irrationally a lot, so we can still see maybe a retracement back to this 1.44860 before we have a decline again. So just prepare your mind for it. So but if we see a move above this level of 1.44869, above this level, I will not be willing to take a sell bias at that particular area. So I'll be looking, I will be watching and then maybe predicting my next move, maybe to go long at that particular area. So we saw the decline in AUD USD last week, and the decline was massive. We have a massive decline from the top at that particular area, and then just from, let's say, something like head and shoulder here, and then we have a decline to the downside. So any adjustment you see should be an opportunity for you to look for a bearish setup to 0.65885, as we are still in a downtrend on the AUD USD. So the next possible target is 0.65885 right here, but just key, it will give a room for a retracement at that particular area. So any retracement you see, there's an opportunity for you to look for a bearish setup to 0.65885 on AUD JPY too. I'm favoring to the downside, but I have two buyers here, and the two buyers will be on if. So if we have a break below this 95710 right here, I might not be willing to take a buy bias. I will be willing to take a sell bias back to 92757. And another if is if we have if we have this sustained, we have this particular level sustained, I'll be looking to take a buy bias to our previous target set, which is 9800, because if you check it, actually we are still in an upside. So we might actually have, oh god, this thing here, then maybe a break above that particular level right there. So that's what I'm looking to take at that particular. But if we have the geopolitical tension between the distance still sustained, then I think JPY will outshine most of these commodity currency, and we have AUD JPY back to 92750. But I think the Australian dollar should be weaker, because the one we saw a decline in most of the Australian dollar pairs and then the SND last week, and then I think it should continue this week also, because on AUD Swiss franc too, we can see something like Australian weakness playing out, because after breaking below this particular level right there, as you can see, we have a break below. So any retracement you see is an opportunity for you to look for a bearish setup to back to 0.58818 right here. That is what I'm looking, especially if we have the geopolitical tension fear. That is the CHF will be strong, the JPY will be strong, and then the gold, then actually maybe US dollar can join the party at that particular area. So the next one should be the SND US dollar. Here we have the break of this with momentum. We have something that looks like the head and shoulder right there, and then we have the break of the neckline right here. So any adjustment you see back to this level should be an opportunity for you to look for a bearish setup to 0.60412 right there. So I'm looking for a sell. I'm looking at the sell bias at this particular area to 0.60412. I will not be looking to take any position if we have a break above this 0.62091 that particular area. And then the last way we want to check is the GBP Swiss franc. And then I was still talking about the political tension. I think it might actually play out. So this GBP TF forming the head and shoulder at this particular area. So we should see a move back to this particular level right there. So I'm looking for a sell bias on GBP Swiss franc right there, and then my target is at okay, let's see right here. So my target is at 1.1267. So any movement above this level, if we have a break above this level, I might not be taking the sell bias on pounds CHF again. But this is what I'm looking at right there. We have some like head and shoulder right there, and then we should have some move to 1.2670 in the next couple of days, and then maybe we can have a break of this level back to this particular level right there. So guys, this is the weekly forex forecast, and this analysis is based on my own perspective, and then is just for educational purpose, not for financial investment advice. So we have the link of brokers, and then the Telegram link in the description box, so you can click on it and then join our Telegram group. That is where I'm dropping my trade, any setup I want to enter, the take profit, the stop loss, and all. So that is where I drop it, and you can join our premium signature channel, which we have the 80 to 90% accuracy, and then you will be sure of growing your account and making a consistent withdrawal. And we have the link to the profile in which we trade in the description box. My funded FX, which has no time limit, and then my forex fund both are very reliable profile platform. So you can actually click the link in the description box and then register. So have a good trading week, and don't forget to trade safely.